Hello guys, welcome in our first video series. We are NovaBlocks, blockchain and cryptocurrency school. Today we are going to present you our new tool, the trading system template. So basically, what is a trading system and why do we and you need it? A trading system is a basic combination of a trading plan, a trading strategy and a risk management. If you have been trading for a long time, you know those elements are essential to grow your capital without risking to lose everything. The main idea of the trading plan is to develop a set of rules that you adhere to and how you are going to implement them. Once you have these rules written down, it is much easier to enforce them because there is a clear plan of actions for how you will manage your trading on a daily basis. The trading plan can prevent you from making impulsive and irreversible decisions, something that is especially useful when emotions start to kick in. The trading plan prevents you from making stupid trading mistakes and allows you to evaluate your gains and losses. In addition to this, an effective trading plan can help you to better analyze the market and apply your analysis to your trading strategy. On the other hand, the trading strategy is the bottom line of the plan. Using indicators, trends, patterns, or any other value, you will be able to generate trading signals. The goal of your trading strategy should be to identify trends early and avoid from being stopped by the volatility. Your goal is to find your favorite indicator that helps you identifying trends. Among all of them, you can find moving averages, MACD, RSI, or BV. Such indicators will help you to define if the trend is bullish, bearish, or sideways. However, your next goal will be to confirm those trends. You do not want to be caught in a fake trend, so confirming a trade is adding a layer of security to your trade IDs. It can be divergences, chart patterns, or candles. Now coming to your risk management. It simply means the management of your capital. Risk management is your ability to manage your earnings and investments so you do not take risks outside of your trading strategy. When we talk about risk management, it does not just mean optimizing profits and reducing losses as we tend to think. Instead, it is about taking an overall view which allows you to consider the various factors before positioning yourself. Depending on your personality profiles, the implementation of money management will be different. It will vary according to each person's priorities and the values that he or she honors through this activity. As everyone is unique, it will probably take you several months or years to apply a rigorous and personalized money management. Nevertheless, the error is part of the learning process and is entirely reasonable for novice traders to get a little lost in the meanderings of risk management. So, back to our trading system. NovaBlock template is a document available on Google Sheets. You can customize it for your own trading plan. In this template, you can first find a position simulator. Then you will have the running position tab, the close position tab, a tab for the capital growth, a tab for the trading strategy, and finally a trading plan tab. The last tab is important as it displays all the disclaimers. So, the home page. The home page will display the starting capital, the current capital, and the profit and loss made since. You will have a few social network links where you can join NovaBlocks, so on Telegram, Twitter, Discord, and Facebook. We'll have a website soon that will be displayed here whenever we are live, so not yet. So, moving to the position simulator. This tool will help you to calculate the risk of each of your trades to make them suit your risk management. We have two separate position simulators. So the first one is for the BTC USD positions and the second one is for the altcoin BTC positions. So whenever you want to enter in a trade on Bitcoin versus USD, you can actually calculate all the risk according to this trade. So let's try one here. I will just take a chart I'd made here. So the chart isn't actually accurate. It's just for the record. So here I have an entry at $7,200, a stop below $6,900, and a target at $7,800. So we are just going to implement those data on our position simulator. So the entry price is 7.2. The stop price is just below 6.9, but I will just put those for the record, and the exit price is here. I will actually just for this example put it to 7,000. So you will understand why. So here you have your current capital, which is displayed here, which is 5 BTC, and the position size of the trade. So the position size is calculated with the amount of the contracts bought here. Below you have the risk amount in BTC. So whenever it will touch the stop price, you will lose almost 0.1 BTC. This is corresponding to 2% of your overall account. On the other hand, if you win this trade, you will win 0.26 BTC. It will automatically calculate the risk-reward ratio, which is here. What is the risk-reward ratio? Is that your profits will be here 2.7 times more than the risk incurred by the position. Just here you have the leverage, which you can customize as well, and it will display your allocated size for this position. This is quite important because if you are allocating just 10% of your overall balance on a margin trading exchange, you will only have 0.5 BTC here available. So you want this size to be lower. But you also want your liquidation price to be below the stop price. So here it displays okay, but if I wanted to have a leverage of 50, which is absolutely crazy, but let's try. We have a liquidation price at $7,056, which is too high because your stop price is below. So you have to adjust it. By the way, here you have a little warning because liquidation price can differ regarding the exchange you are trading on. For example, if you are on BitMEX, the liquidation price will often be largely above what you expected it to be. You have to check, and here you will have a little checklist for your trade regarding your your risk management. So here my risk management is I don't want to risk more than 3% of my trading accounts on each trade. So here it is below, so I check. My risk reward ratio must be above 2, which is okay here. So now my leverage is okay, it's good. So now I will move to my exchange, set the entry, or just enter in the market, check it. Set my stop loss, check it. Set my exits, check it. Then the trade is properly done, and you will have to move to the position tab to paste every information here and let the trade run. And I will show you that in the next video. Bye.